queries that our viewers have been sending this morning, that need to be addressed. We'll come back and discuss all that, but let me also bring on board our next guest for today. Joining me is Aishwarya Dadhij of Fident Asset Management. Aishwarya, great to have you on the show. We are chatting up after a long time, but before, of course, turning to markets, I want to ask you, what are your takeaways from, how we have performed in the T20 World Cup? Any takeaways from the last couple of matches that, one can apply to investing as well?
So obviously that was one of those key moments where the whole of the country rejoiced like anything, and thus your smile says everything about it. But I think the one key takeaway which I had, especially when I was watching it with my kids, was to never give up in life. So the way we got the match completely, we were almost like there was 7% probability of winning it, and the way we took it back from South Africa is what that talks about the character of our team. And whether it is stock market, whether it is live, whether it is whatever you are doing, you should never give up if you really believe in something. And that is what we want to bring it to the market itself. Nandit, obviously, when you connect it with the market, market is also the same pedestal as what Team India performance, right? We are at 24,000, almost all-time high. We saw a very good month gone by, almost 2% gain in the last week. So we have to be on, I would say this is the time when we have to do more of introspection and not get carried away by the excitement and the exuberance which is, running high among investors, especially among non-institutional investors.
Of course, the first half of 2024 has been phenomenal for markets. We've seen levels that we've not thought that we would conquer, right? 24,000 Nifty. The Nifty Bank has also started firing up. But just want to ask you about the FII flows. They have picked up and picked up quite well in the month of June, because as we were stepping into the election verdict day, FII positioning in index futures was short 3.5 lakh contracts, right? Compared with now, it's on the other extreme. There are long some 3 lakh contracts or thereabouts. In the month of June, in the cash markets, we saw FII buying to the tune of 26,000 crore rupees. Do you think this trend is here to stay now? Because since the start of the year, FII flows were missing and the rally was being driven by domestic flows. So here on, whatever up move comes, do you think that will be driven by FIIs turning back to Indian markets?
Yeah, so obviously we saw this almost 8%, or I say calendar, we saw almost 10% movement in index, different indices. This is despite of FI, as you said, we're completely out of the market. We saw FI, a short position on the day of election was possibly a recent high. Even FI holding on the cash segment is close to future or little less than 17%. Which clearly indicates their, I would say, the mentality of staying away from an expensive valuation market like India. But what we are witnessing right now in the month of June, as you said, there was a good amount of flows which was visible. And if you carefully look at, obviously, it's not a long-term trend, but if you see the last week, where obviously Nifty moved almost 2% up, where the mid and small cap were barely flattish or marginally negative, it clearly says that the frontline stocks are seeing buying now where there is a value. And that is the kind of segment which FIs are now looking up for India. If you look at from FI's mindset compared to other market, obviously India at almost 22 times forward P, 3.8, 3.9 times price to book is one of the most expensive market in India, but in the world. But if you look at the two most important variable, first obviously the way the economy is functioning, the macroeconomic variables cross spectrum are very strong. And second, which is the most important determinant, is the earning. And everybody can easily see that there's a 14-15% kind of an earning growth for the next 2 years is quite doable. And with this continuity of this government in some form, the economic policy continuity, the capex movement, now they don't want to miss out on this front. And the easy way they want to play it is through large cap frontline stocks. And if we extrapolate what happened last week, this might be the the momentum going forward, where we might see a lot of, say, private banks, IT, some pharma names, or even some FMCG names, which were not in the investors' favorite list. Possibly we might see a lot of inflows coming in this year. And it can all accentuate further if we see Fed participating in the rate cut. If that happens, the money flow to the emerging market and possibly India would be the biggest beneficiary. So to summarize this, I believe, though too early to say that FI is possibly, given their holding right now, and their expectations about growth, we can see good participation for them in the coming 6 months.
Right. Expect good participation from FIIs over the next 6 months. But let's talk about certain pockets then. The two pockets that have been in focus last week were, of course, A, the telecom pack, B, the cement pack, the kind of consolidation that we have been witnessing in the cement pack. Let me start with telecom then. We have been anticipating tariff hikes post-elections, right? But a 20% tariff hike, your thoughts on that? Of course, Jio took the leadership here. But how does it really bode for a player like Vodafone, that has been fighting tooth and nail to be in the industry, fundraise, paying off debtors and stuff? How does it really bode for a player like Vodafone? And do you think the run-up in telecom stocks, or this bit of news of tariff hike is already built into these telecom stocks?
No, so expectations were already running high, Nandita, about this tariff hike, and it was long due, if we see say from that perspective. And I think Jio came out with a good, robust, percentage increase. But I think market was expecting a slightly higher number for Vodafone and Airtel also. And we saw a very good run up into these companies, right? So two things which comes out very clearly out of this is first that this would be more or less like a player market, where there is now very high probability of Vodafone sustaining with this kind of hike that we have seen. And I think across for all three of them, it will be the biggest beneficiary will be to the Vodafone because the need of the hour is the highest over there. And the second thing which comes out of this is obviously we saw the spectrum auction which happened, which turned out to be very good, but the ability to continue to spend would be much higher in the coming years. So apart from the telecom players, I believe it's like, if you look at some tenancy rights and things like that, those expenditures will also be very robust. So a player like Indus Tower would also be a big beneficiary out of the whole thing. So I believe it will provide the much needed earning momentum in the telecom sector. But then the valuations have now almost, I would say, have captured, I would say, at least 50-60% part of it, and the rest would possibly play out over the next 4 to 6 quarters. But telecoms is rightly placed with this hike, and it will massively benefit of players like Vodafone and Indus Tower, as per our understanding.
And what about cement? Is it time to go all in and look at some of these cement names? Because consolidation has been the name of the game, right? We've seen Ambuja making acquisitions, now Ultratech buying stake in India Cement. So particularly in the south, a lot of consolidation has been taking place. But is it time to go big on the cement space now, given the kind of news flow that is coming out of that sector? Is it poised for big gains going forward?
So there is a lot of interesting things happening in the cement. I've been tracking cement for almost 17-18 years now. And at very few times we have seen that price hike happens in the month of monsoon. Right? So it says a lot about the sector. And obviously the way government is putting a lot of focus on housing, and I would say infrastructure building, cement growth, at least for the next 2-3 years, is pretty sorted out. And that's like you mentioned about the consolidation happening with India Cement, and the majority of this companies kind of become like, when I started the sectors, Ultratech was almost like 30 million in capacity. It is almost 5 times from there. And possibly with the way that the top 3-4 players are trying to create consolidation, there would be more pricing discipline in the whole space. So we have growth over there. We have pricing support, and the consolidation can play a really important pivotal role over there. But we have to be a bit, I would say, careful on valuation side. If you have 6 months view, possibly you will be able to see some 10-15% movement in cement stock. But if you have a 3-year view, then valuation will play a very important role. So stay with the players who are the large enough, where you can see the massive all India benefit of how the cement operating mechanism work, and the themes, the sectors, especially from government spending, where we will see major beneficiary coming. So in short, cement is in for us. We obviously have players in our portfolio in cement stock, and we believe at least for the next 6 months or year, things are looking very exciting. We will have to be watchful for slightly longer term, given how the context of individual companies plays out.
All right, couple of more questions then. Banks, private banks, they've just about made a comeback, right? But in terms of earnings, we have the Q1 earnings upon us. Do you expect a big leg up in terms of earnings upgrades for some of these private banking names? The big four, Axis, HDFC Bank, ICICI. Would you expect that to come in, in the first quarter itself, or do you think, that could come perhaps in the third quarter? Because margins and, cost of funds, they are still, they are a spot of bother for banks, right? Even though asset quality is at multi-quarter highs. Your thoughts on when can we really expect some kind of an earnings upgrade when it comes to these names?
I expect lesser amount of positive surprises in bank. It will be more like a consistent play. Now, obviously, we also what RBI came out with this banking framework and banking industry data, where we saw that we are possibly post 2013 banking is in the most solid state. Whether you look at from asset quality perspective, gross NPA, net NPA of almost 0.7, 0.8. So that we are in a very, very solid position. But if you look at the parameters which will drive earnings, specifically your credit growth, which is healthy at almost 13% for the industry, we might already seeing some pressure building up, some area of concern in MFI on asset quality front, which possibly might come out 2 years, 2.5 years down the line. But we are also at the same juncture where we will possibly see. We can just estimate about a possible interest rate cut, and we don't see too much of it impacting the names from banking perspective. So what we are building up right now is between all our banking stocks portfolio in between 15 to 20% earning growth for the next 2 years. We are not factoring in any asset quality parameter risk as of now for the next 2 years. We will be watchful for I would say post 2 years time frame, because obviously things goes in cycles, ups and downs. But to answer the question, we are not seeing any big surprises on earning positive side. Things will be more or less in line with the expectations. The surprise element can come from, PSU banks at least because of, the movement in treasury and if it happens, that is what market is not, discounting. But more or less private banks are possibly expected to report decent set of numbers. And what is really comforting for investors is the valuation of the large cap private banks when we compare it to other sectors and segments. So more than the surprise, I think the flows, the money flowing especially from the FIIs can see a lot of interest into this large cap private banks, and that can bode well for the stock prices of this banks going ahead.
What about the IT pack? What are your expectations from the first quarter numbers? The IT pack itself was up almost 8% in the month of June. In anticipation of a recovery, perhaps from the second quarter, should one take position now?
So, Nanda, we have been discussing IT for the last 6 months. We saw how Accenture reported numbers. Obviously, they just tweaked their guidance from almost 1 to 1.5, but upper end was moved from 3 to 2.5%. But I would say the consulting pack and even the outsourcing pack guidance was not that bad. We have already seen some companies like, say, LTI's management indicating about some green shoot coming in 25. So we don't expect too much happening in this quarter. Obviously, we are starting the IT results in a couple of days from here. So majority of these large IT companies will do almost close to 2.5% kind of CC growth, more or less in line with expectations. The mid-size players like Persistent or Emphasis can do much better growth of 4 to 5%, but no big fireworks happening, at least in this quarter. But if I look at from current 2025 perspective, when you look at the commentary, when you're looking at the possibility of interest rate cut happening, obviously the clients are in wait and watch mode. But if you see the last 2-3 quarters, the deal pattern has been very, very robust, and we believe it's the theme to continue in the coming days also. So this will start reflecting in better revenue growth in calendar 25. And I can tell you, market have a tendency to discount things in advance. So I believe IT looks very, very exciting at this juncture. Valuations are very, very rational compared to what others are doing. And we believe green shoots will surprise the street. And there will be possibly big earning upgrades when we will see the number of calendar 25 or different quarter. So we are very, very positive on IT. We are going overweight on IT as of now, across large cap and mid cap. And I believe that could be again one area where FIIs will try to participate meaningfully, because this is one sector which has been completely off the shelf for majority of the institutional investors, including FII. And I believe the time is looking very interesting for a revival in that sector.
All right. Last question, really. Where do you see the Nifty ending the year? First half has been good, a 10% gain. Would you put a figure to it? 25,000. Can we end the year around 25,000? Would you put your finger on it and say that okay, we can, or do you think returns here on would be a little muted?
So in the 15th over, I told my son that we have lost the match, and then we ended up winning. So if I can't predict a match of 5 overs, it's very difficult to predict where the Nifty will end in this calendar year. But one thing is, I'm pretty sure about that the bullishness in the non-institutional segment, especially retail, is very, very high. This is my feedback, and I'm interacting with a lot of HNIs and those kind of people who participate in the market. And even on the institutional side, FIIs are turning positive on India with the flows. At least this is 1 month flow. So we believe if I look at from the imminent risk perspective, there is very limited risk in economic parlance, or there's very limited risk in the earning growth parlance. There might be obviously some unforeseen risk. But we believe this momentum of, I would say, fraud, if I use that word, can continue much longer in this calendar year. And obviously, budget will be one important caveat. If we see the infra spending, and obviously we will also see a lot of revenue expenditure happening in this budget after the change in the political landscape. But if the budget turns out to be good and if this earning growth momentum stays put, I believe that large cap is where the movement can happen. So I will not be surprised to see higher levels. Obviously, valuations at 22 times forward is definitely not cheap. But historically, we have seen market going crazy at 24, 25 times P forward also. So if we see all of these things coming put together at the same in the same basket, we might definitely see a higher level. And there is no reason as of now which we can see, which can really derail the market except from valuation side. So we should not forget, if there is any unseen or unforeseen events play out, whether it is US debt crisis or China is completely out of the window, but if any other geopolitical risk suddenly spurt out, then possibly investors has to be careful because valuations are definitely not enough. But if you just keep these things aside, and we factor more or less the US election and the political landscape which is changing in Europe, I believe India is in a very sweet spot. So finger crossed, I think we will see definitely high level by the end of this calendar year.
All right, 25,000 for the year end, not ruled out yet. Anything can happen, and that was demonstrated by the men in blue in the match on Saturday as well. With that, Aishwarya, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Always a pleasure. Look forward to our next chat.
Thank you.
Well, with that, let's go.